Good afternoon, this is Clark Neighbors with BIS Commodities with the market recap for June 24, 2016. Grain markets, very tough week in regards to price movement. A week ago Friday, December corn was at its highs near 450, I think at 449. We're down 44 cents on the week. So basically in a week's time, December corn has went from the contract high to basically within 20 cents at one time of the contract low. Did close right on top of the 100-day moving average for what it's worth technically. November soybeans are down 65 cents on the week. Not as big of a move on the beans as the corn. You're still like $1 over the 100-day moving average on the November soybeans, and part of that's just due to fairly strong export demand in the bean market. We'll talk more on that later. Wheat down 25 cents this week in coincidence with the corn and the beans, and obviously you have harvest going on, and right now, especially in the hard red winter wheat areas, harvest is very big crop and quality looks to be very good. So early in the week, a lot of this downplay was the weather, not as much heat in the forecast. We saw better rains in majority of the Midwest over the last week, so crop conditions in a lot of areas, if not anything, have improved or definitely stabilized with the recent rains. You still have some portions of the Midwest that would like to see some rain here in the near term, and also see not a big return to any type of heat. Right now the weather forecast seems to be giving some opportunity for that. Now this morning, or Friday morning, the vote in Europe, more specifically in Britain, for the Brexit was a huge surprise. Financial world went into this election assuming that Britain was going to remain part of the Eurozone, and obviously that has not happened. So now they will be in the process over the next couple years of becoming independent and not using the euro any longer. That was a huge surprise of the market. We saw a huge spike in the dollar this morning. Obviously the stock market took a huge hit because of concerns of global slowdown or even maybe global recession going forward. Metals took a big rise to the upside, but in all cases, all assets took a big hit, and that also included most commodities, with energies down hard, and early in the day the grains down hard, and we also see that spill over into the livestock. So that is going to be a story to continue to watch. Obviously the trade today was more of the gut reaction of what happened. Now going forward there may be a little more stability, but we'll have to see. Commitment and traders report, funds are still very long corn. As of this past Tuesday, they're still long 224,000 contracts of corn. That's down 27 from a week ago. The funds are still short wheat. That short position is not as large as it once was, and they're still long about 200,000 contracts of soybeans. So going forward, we're in that time of year, seasonality-wise, where weather's a key, where a lot of times the market can improve this time of year, or it can lose a lot of its favor depending on crop conditions. Keep in mind, a year ago at this time, we were on the way up with some weather concerns. Market topped out, give or take, around the 4th of July, and by the middle or tail end of July was back to areas where we started in early to mid-June, so it was about a 30-day window. So we'll see how that happens. Every year is a little different. Keep in mind, movement has slowed down this week dramatically because of the drop in the market. Logistics are pretty tight in some areas, especially anything involving the river, especially anything involving the southern river, namely St. Louis. It's going to be a challenge to carry out the movement needed to happen between now and the end of the year. Keep in mind, there's a lot of a lot of old crop beans still in the books to be shipped, probably more than we're going to be able to ship between now and September 1. We should see a fair amount of those beans rolled over into new crop. But there's more beans on the books right now to ship than we've had in the last several years. Also a pretty good book on corn. So potentially a movement slows down basis could improve. Keep in mind, and we'll have an update on this on the stocks report this upcoming Thursday, the 30th. Get a stocks report and the plain and acreage report. So those will be key things to keep in mind as we get into this week's trade. Also this afternoon, commitment of trade, or excuse me, cattle on feed report came out. Fairly neutral, it looks like, in line with what the trade was looking for, with cattle at 102%, placements near 110%, and marketing's at 105%. There was also a quarterly hog report, which many in the trade will look at as bearish, as the hog number at 101.8. That was about a full percent larger than what the trade was anticipating. Kept for breeding at 101.9, percent and a half bigger, and marketing's pretty much in line. So that may be a little bearish to the hogs, which, keep in mind, the funds are very long hogs right now. Up through last Friday, hogs, I believe, were the highest return on commodities so far in 2016. So in this upcoming week, again, you get that report on the 30th, the stocks and planning intentions report. We'll have to watch the aftermath or the follow-through from the election in Europe, and then obviously weather as we go through. So with that, everyone have a great weekend, and we will talk to you next week. Again, this is Clark Neighbors, BIS Commodities at Cedar Rapids, Iowa. If you need any questions, call us at 800-373-2525 or biscommodities.com.